Actually, on November 1st, the tariff on China goes to 157%, which is record-setting territory. And we don't want that because it's not sustainable for them. They can't sustain that. We don't want them to have to go through that. So I'm meeting with President Xi, and I would say we have some big issues, like with the farmers and various other things. But the first question I'm going to be asking him about is fentanyl.
Ahead of his sit-down with Xi Jinping, President Trump says he's confident of getting a deal on everything, including fentanyl, in exchange for easing China's tariff pain. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Confirmation of a Trump and Xi meeting, easing investor nerves around the trade war, and China's aims to greatly increase self-reliance in tech is boosting related stocks. Moneta's global market strategist, Devitt, will be joining us to discuss why equities continue to find excuses to rally higher despite a range of risks. Intel's inside again for investor playbooks. Shares surge after the company returned to profitability and gave an upbeat revenue forecast, citing, you guessed it, AI demand. We'll be speaking to one of Intel's biggest customers to gauge the demand picture. Lenovo's APAC president, Amar Babu, joining us later this hour. Well, we have breaking news out of China. Xinhua News Agency citing President Xi Jinping saying that China must focus on its own tech developments. Of course, China must focus on its own affairs despite external shifts. Xi urging breakthroughs in key core technologies, and while also saying that Xi is pushing for optimized regional economic layout. Of course, all these headlines coming ahead of that crucial and much anticipated meeting between Xi Jinping and President Trump on the sidelines of the APEC summit. Taking a look at where we are in terms of the markets right now, with the MSCI Asia-Pac index up about 0.5%, the CSI 300 in positive territory, inching upwards, up by 0.6%. Of course, that's on the back of Xi Jinping saying tech self-reliance supports quality developments. Xinhua News Agency citing the Chinese president, the Hang Seng Tech Index surging after China deepened its push for tech self-reliance. The loonie edging lower after Trump said all trade talks, by the way, with Canada have been terminated. Traders bracing for the release, of course, as we say, that delayed September U.S. CPI report later Friday. Now, the data collected, of course, before the U.S. government shutdown is expected to show core CPI climbing for a third straight month. Let's get back to China, just wrapping up its fourth party plenum with a promise to enhance technological self-reliance and grow the domestic market in the next 5 years. Its leaders are looking to both to insulate the economy from foreign pressures and build a sustainable engine for growth. Let's go to Shanghai. Our China correspondent Min Lo is there. Min, the biggest takeaway from the plenum?
Yes, we had the press conference earlier this morning, and the officials were highlighting some of their assessment of the current international environment, saying that we are entering a period of profound uncertainty and volatility. The balance of power globally is shifting, and China needs to double down on its own affairs, and that means technological self-sufficiency. China's industrial policy, the officials say, is going to be the #1 task of the party, and China wants to be a powerhouse not just in AI and chips, but also aviation, the internet, transportation, and this is an important priority. China doubling down on advanced manufacturing as the backbone of its economy. Bear in mind, manufacturing already contributes about 25% to GDP. It's the biggest contributor of GDP so far, and you can imagine that this is likely going to be another sticking point, given that the US has been accusing China of over-relying on its manufacturing and exporting its overcapacity to other countries. countries. But the other big focus as well from the plenum has been consumption. It was mentioned 4 times in the communique, more than the 1 time it was mentioned back in 2020. It's a major focus, but some analysts are saying that, terms like anti-involution, they were omitted from the language so far, and they're saying the language is not strong enough to show China's determination to end deflation. But some others are saying, look, this is a broad policy document. The details may not be fleshed out until later in the coming months. It still shows a priority that the government is intentional in addressing deflation, and certainly this is something that is an important priority. Part of it is also improving people's livelihoods and ensuring that people have the money to spend and ensuring enough spending on basic social welfare programs as well.
Min, the White House has confirmed that Trump will be having a summit with Xi in South Korea on the sidelines of the APEC meeting next week. Realistically, what can be expected?
Well, I don't want to say something that, could really, there are just infinite ways that this could turn out within a week's time. But speaking to investors here and to analysts as well, it seems like the baseline scenario is that they're going to meet, they're going to have dialogue, or perhaps agree to continue having dialogue and maybe extend that trade truce that is expected to expire by November 10, after which tariffs could ratchet up unless they decide to extend it. So that's the baseline scenario. As to whether or not there will be a sweeping sort of blanket grand bargain, expectations of that is pretty low. Although President Trump has been setting a quite positive tone so far ahead of the meeting. He's saying that everybody is going to come out very happy from that meeting. There is a long list of items on the agenda, not just tariffs, but also fentanyl. And there is the threat of U.S. placing more export controls on U.S. software. There is, of course, issue of China's purchase commitment to buy soybeans from the U.S. Also, the geopolitical tensions, the Ukraine war and Taiwan, both also on the agenda. Interestingly, we're getting reports today that Chinese state-owned oil companies are canceling some crude oil shipments from Russia after U.S. started sanctioning some of the state-owned oil giants in Russia, including Rosneft and Lukoil. So it's an interesting move. It shows that China is concerned and it's taking some preemptive action to avoid getting slapped with secondary sanctions for violating the latest rules from the U.S. and perhaps a gesture of goodwill as well ahead of the Trump-Xi meeting.
Min, thank you so much for that update. Bloomberg's China correspondent Min Lo. Let's get market insights from Aoifinn Devitt, Senior Investment Advisor and Global Market Strategist at Montea, which has more than $40 billion in assets under management. Aoifinn, good to have you with us. First off, we're getting headlines front and center about trade. We have, of course, expectations of that meeting between Xi Jinping and Trump on the sidelines of APEC next week. We have also Trump coming up with that headline, saying that all negotiations on trade with Canada are off the table. They've ended. How are you making sense of the headlines we're seeing, and how is that influencing your positioning in the market?
I will say that markets have shown that they are not particularly happy with this kind of dramatic headline grabbing that we're seeing on the trade side. There was a certain level of noise that markets had started to normalize, and we know that had really kind of receded into the background. There was question marks regarding who is actually bearing the tariffs, but there did seem to be some kind of a settling down of that question and a sense that tariffs perhaps were not as inflationary as thought. I think everybody knows that sort of big bang tariffs like were cited for China about 10 days ago would be highly disruptive, and that was why markets reacted as they did. So we are back into the zone of worrying about trade again, because this kind of suggestion around, say, Canada, one of the closest trading partners, this is is disruptive stuff. And I'd say that markets are not necessarily in the mood for a whole lot of disruption just at the moment.
Aoifinn, market's not in the mood yet. It finds every reason to grind higher. What's going on?
It's that kind of the confounding resilience of the U.S. consumer, of the U.S. markets. And it is curious. Yes, they're grinding higher, but look at the volatility. We've been speaking about the volatility in the fixed income markets, the MOVE index, for some time being higher. Now the VIX is higher than the MOVE index. bond markets, which typically are the ones that would maybe sort of in the early days look at a sound an alarm, they seem to be quite calm right now. They seem to be expecting now coming out of the US a modest CPI print, nothing to disrupt the trajectory that we're seeing on bond rates. So it's equities where the action is, where the activity is. We've seen meme stocks explode. We know so that yes, they seem to be grinding higher, but I'd say with this element of calm that we'd seen earlier. So that's where the trade worries are starting to show themselves.
Is there a place to hide, Aoifinn? I mean, not too long ago you'd say gold, but even gold, its movements, its correlation with the equity market has been, what, positive?
I'd say the place to hide is to have a broad-based equity portfolio. That may have been very unpopular when it was the top 10% that was grinding most of all. I'd say also having a non-US portfolio that has got solid exposure to some of the consumer stocks, having Asia stocks in the index there that will offset the some of this trade's tension because there's exposure essentially to both sides, to winners and losers. That is how we've found the most calm way to navigate these markets, is keeping on that diversification mantra.
So diversify is the playbook for the next 12, 24, perhaps even 4 years. Aoifinn, I mean, how closely are you looking at the CPI print? I mean, we're talking about how, risk is grinding up, but this data, will it provide any clarity? Or if you see a data that's, tilting towards the upside, how much unraveling might we see in the market?
It is important. We've had a dearth of data. There's been, obviously, with the US shutdown, less data than we're used to seeing. There's been what we've been referred to as anecdata, so people referring to anecdotes and trying to derive data from that. The problem with that is inflation is just so complex. We know that into that is fuel, food, and then services, which have been the most stubborn of all. Fuel has actually been surprisingly less of a contributor. So the oil price was at a 5-year low until just these recent set of sanctions. And food has been the one that is most visceral, most literally a kitchen table issue for the lowest end consumer. I've been speaking about a K-shaped recovery for years. It seems that that K-shaped recovery idea has now started to get popular traction again, because we know that the lower end consumer is the one with the subprime car loan that is tipping some of these private credit funds and entities into bankruptcy, because we know there has been delinquency that's ticking up there. So inflation is a key issue. It is complex, though, and I think we're not going to necessarily be able to derive from a headline number, which will probably be low, a conclusion that inflation is something we no longer have to worry about.
So we're seeing fuel prices going higher on the back of the new sanctions. Is that a cause for concern? I mean, as much as we talk about how they're rising, they're still at mid-60s at most.
Exactly. They're at a 5-year low, had been at a 5-year low until now. And why was that? Was because inventories were building. This advocation to drill, baby drill, seems to have been taken quite literally. And we now have an abundance of oil. And that also signifies the fact that those high inventories are leading to a 5-year low oil price, or had been until the recent explosion in tensions. That suggests that perhaps growth is not a given, which is ironic given all we hear about is the demand for energy. So that perhaps is a bit of a drumbeat in the background of maybe things not being so great on the demand side, certainly for energy. So it is, I'd say, for geopolitical side, I think that will be a short-lived spike in the oil price. We know that geopolitics, despite their increasing urgency, have actually not really affected commodities, have not affected markets.
As if geopolitics, tariffs, trade are not, huge enough issues, now we have the concern of private credit. Should we be on cockroach watch here, Aoifinn?
It's a great question. And a point that I made in a recent podcast was that now that we have high-level officials such as the Governor of the Bank of England and Jamie Dimon, these respected officials using the terms like cockroach, suggesting that perhaps we should be sounding the alarm. These people with that kind of gravitas, when that happens, it goes from being a few short sellers perhaps in the dark to actually being mainstream headline material. That's when the ordinary investor starts to get wind of perhaps just things not being as they seem. And we are at this point grasping for evidence, for evidence of things not being perhaps as rosy on the surface. And this is exactly the kind of evidence we had to look joining the dots backwards into 2008. So yes, we should be concerned that due diligence standards are not how they should be. Remember, we're still investing in private credit. It's a $3 trillion part of the financial sector right now. And I would hope that there is a focus now on due diligence standards, on doing that extra check, maybe sacrificing some return in order to do so. But I did see the suggestion recently that there wasn't enough return in private credit to pay for this due diligence, which is an extraordinary suggestion that at these levels of return, there simply isn't enough margin to do due diligence. I find that hard to believe.
You cited people of gravitas. Let's cite Henry Kravitz of KKR. He says, what systemic risk? All nonsense. I mean, how do you respond to that?
Well, I'm a little, I suppose, confused by that suggestion because systemic risk, we know, it has always been what would have sunk a market. At Moneta, we've been looking for evidence. I suppose we're trying to do some pattern recognition around previous markets. We've been looking at this AI bubble, wondering whether this invention essentially of complex instruments to pay for an unprecedented amount of spending on tech centers, on chips. This is all something that looks very like a pattern that we saw in the past. Whenever the more complexity that enters the financial system, the more potential for there to be opacity, for due diligence not to be understood, for boards essentially to provide oversight that isn't really effective. So I think there is a systemic risk. And why? Because there is this codependency, not only within the AI segment, but also between private credit and the CLO market. We know that a lot of CLOs had exposure to first brands, and between private credit and private equity. So I'd say there is not necessarily any single one systemic risk, but we certainly have the systemic interconnectivity that we now know could very well trigger a more broad slowdown. And it doesn't take, as we know, much more than one or two cockroaches for there to be a crisis of confidence. So that's a bit cavalier, I would suggest, to say there's no systemic risk. I think there could always be systemic risk. We have to be vigilant to look for the signs.
Aoifinn, since we're talking about risk, let's delve deeper into gold. I mean, it's been a 9-week rally. It's coming off its highs, but still year to date up almost 60% still. I mean, how are you reading into this gold story?
Very interesting. Of course, when anything's up 60%, we have to expect more volatility on an intraday basis. And we've seen that with the large tech stocks. That's something now I think investors have learned to expect when they have an easy run like that, a great run, that there's no free lunch, essentially. They'll be expecting some volatility. We've been focusing very much on the technicals behind the gold rush, essentially. Who has been buying it? Why has it been rising? What we'd say is it's not necessarily the case that it's necessarily an alarm bell that gold is going up. When something's up 65% year to date, or had been before the recent correction, there's going to be a sense of FOMO, a sense of rushing in, a sense for if I need to take some profit on my equity, I can put it in gold and maybe get some diversification there. So I don't think it's necessarily a run for the exits or risk off trade, a safety trade. I think there's definitely return bases in there, as well as the technical factor around China and not wanting to own US treasuries only. So we have to look beyond the shine, essentially, at this point.
If it is a correction, how deep might it be? Some point to 2006, where we saw gold giving up 20, 30% before rising up again. Could we see a similar pattern here?
I would say, given the technicals we're seeing, yes, we've seen a lot of flows into gold, and that could be hot money that could flow out. But given most of the technicals suggest that it is central bank buying of gold, shifting away from other, perhaps reserve holdings in favor of holding gold, I do not imagine central banks would be moving in that kind of hot and swift way. So yes, there could be a correction. This is probably highly overdue, a correction of this magnitude. But to see something as severe as that, we have to remember the other drumbeat, which is that gold is there to protect against debasement of currency, as well as fiscal impunity through governments around the world. We still have this rising spectre of very high government debt that typically leads to loss of confidence in fiscal policy, and that's where gold comes in. So given, and equally as an inflation hedge, given inflation is not yet in the rearview mirror, there are multiple reasons for wanting to hold gold. So I don't see it as being a one-trick pony. On the other hand, Bitcoin may look a little bit more like a one-trick pony at this stage, given we're still kind of at the discovery stage as to how Bitcoin behaves. And bizarrely, we've seen Bitcoin behave in quite a volatile fashion in response to the trade discussions and the volatile trade discussions we spoke at the beginning of this. So that's yet another clue as to what drives Bitcoin. So at Bitcoin, I'd say gold having been a much more stable, solid, I'd say a reliable asset class than Bitcoin, it's likely to be the beneficiary of flows at the exception of Bitcoin.
And we heard from Jean-Claude Trichet just yesterday saying he still is a non-believer when it comes to Bitcoin. Aoifinn, good to have you with us. Aoifinn Devitt, Senior Investment Advisor and Global Market Strategist at Montea. Thank you so much for that. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back to Insight. U.S. President Trump has said he would immediately halt all trade negotiations with Canada. In a post on Truth Social, Trump accused Canada of using an advertisement that he said featured former President Ronald Reagan speaking negatively about tariffs. For more, let's bring in Bloomberg's News Canada Executive Editor Derek DeCloet in Toronto. Derek, put this in perspective for us. I mean, this came out of the blue.
Yeah, it came out of the blue. Now, this advertisement is not an advertisement of the government of Canada. It's actually from the government of Ontario, the largest province. And what they've done is they've taken a clip of, or some clips of Reagan speaking when he was president, and speaking about the virtues of free trade and why he felt that tariffs are negative, because Reagan was a free trader, and that's basically the substance of the ad, which is about a 1 minute long television ad, and which they're spending tens of millions of dollars to buy airtime to air this in the U.S. And that's what Mr. Trump is upset about.
Suffice to say, relations between the U.S. and Canada are pretty fragile, and trade talks are on again, off again. I wonder if there is an opportunity for Prime Minister Mark Carney to speak with President Trump at the ASEAN summit this weekend.
Well, Carney will be heading to Asia. He will be going to ASEAN. He will be going to APEC. We're not totally certain whether or not the two men will meet there. Our understanding is that Trump is planning quite a brief visit to Asia, and so it's unclear whether the timing is going to work out. Obviously, there's the big Trump-Xi meeting that has to happen as well. But certainly the two men will be in the same place at the same time very soon.
Derek, what does Canada do now? How do you revive those trade talks, those trade negotiations?
That's a little bit unclear to me. I mean, this just happened. It seems to me that if the advertisement is what's upsetting him, it's probably a pretty easy thing to do to just not air it in the U.S. But the advertisement, which I have seen, by the way, because it was shown to a business audience in Toronto just last week, it is really nothing more than clips of Reagan talking about trade. There's nothing in it that is even about President Trump specifically, per se.
Derek, thanks so much for joining us. It's late there. Our Canada Executive Editor, Derek DeCloet in Toronto. Of course, in the markets, it's about the CPI print. Yes, late, but better than never. It will create some clarity in terms, perhaps, of the Fed moves. Taking a look at where we are in terms of S&P futures, pointing to a higher open, up 0.2%. The other benchmarks also in positive territory again. Trade risks all there. Trump saying that all trade talks with Canada terminated. We have, of course, that meeting between Xi Jinping and Trump coming up on the sidelines of the APEC summit next week. Still ahead, Intel shares surging as chip makers' results signal growing demand for personal computers. We'll discuss the implications for the world's largest PC maker, Lenovo, next. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Let's take a look at how it's shaping up in Japan, Intel forecasting signals comeback is underway. We're seeing those stocks in positive territory. We have LaserTech currently up by about 3%. We're tracking a rally in Intel's Asian suppliers, of course, after the chipmaker gave an upbeat forecast, boosting optimism around its comeback bid. Let's get more with Mandip Singh, Global Head Technology Research at Bloomberg Intelligence. Good to have you with us. I'm just wondering, after 6 quarters of disappointing numbers, is back on track. It does seem like Bhutan is making some progress, but I guess too early to pop the champagne.
Yes, and you have to look at it in the context of where the expectations were and why they delivered a better than expected quarter. It came from their core PC market. I mean, they're talking about PC market that has been pretty stagnant, really getting a boost from AI PCs. And they talked about being supply constrained when it comes to the PC chips that they are making. So that's a positive sign that demand is picking up to a point where they're saying it could be 290 million PCs. I mean, so far we were doing about 230 million PCs, so that's a big step up to 290 million.
But they say when you take a look at the outlook, perhaps fundamentals will have to come into play. Cost cuts, for instance, right? They talk about operating and capital spending for 2026. I mean, looking at $13 billion, that's problematic.
Yeah, well, look, I mean, Bhutan is divesting the Altera business, and he's saying they really want to focus on AI PCs and the AI accelerator opportunity on the data center side. And then when it comes to foundry, which is where they continue to lose money, I mean, the U.S. government's stake is what is, driving a lot of people to expect they will have some sort of an announcement for the foundry business, because right now everyone is going to TSMC for AI accelerators. The hope is with Intel, focusing on their next version of their processing node, they will be able to land a big customer, one of these fabless chip companies going to Intel for some of the manufacturing. And that would be a big catalyst.
The hope is also for clarity in terms of its strategy, how it wants to regain that leadership in a space that it dominated for a long time, but isn't right now.
I mean, you've got to think in terms of, baby steps here. Regaining the leadership, I think it's a very far-fetched scenario, but that's where, it comes down to expectations. The consensus numbers is they're going to continue to bleed share. And right now with this print, now you have to start questioning how much share is AMD gaining, or has it stopped gaining share? How much share is ARM gaining? Because these were the companies that were taking share from Intel.
Interesting. Mandip, stick around. Of course, we have a guest who will be in the know. Let's continue the conversation with one of Intel's biggest customers. Amar Babu is Asia Pacific President of Lenovo, the world's largest PC maker. Amar, when you take a look at, Intel's solid numbers,
I can't hear you.
It does look like we're not quite connected to Amar just yet. Maybe we can continue this conversation, right? I mean, if you take a look at the outlook for Intel, what are some of the key things that can be expected from Bhutan going forward?
I think there's a big focus on gross margin right now for Intel. So for a while under, Pat, you said the prior CEO, you saw Intel's gross margins really take a hit down because obviously they were investing and they were losing share. This quarter, it seems like an inflection point in terms of their ability to improve or stabilize gross margins. And the fact that they're talking about AI PCs being a catalyst for their core PC business, that to me is a sign that gross margins may continue to trend higher from here.
And what do we know about that AI strategy? It is on the right track, but is it accelerating fast enough?
I mean, when I look at what NVIDIA has done on the data center side and, all these big partnership and alliances that OpenAI and Anthropic are doing, like there is so much investment going on when it comes to AI infrastructure. It will trickle down to PCs and even smartphones. And, if you have to access AI services, what Intel is suggesting is you have to upgrade your PCs. Even though it's coming a lot later than the build out of the data center infrastructure, but you just can't keep using your old devices, and it's a sort of an imperative for people to find a way to use these services through upgraded devices, and that's what's driving that upbeat forecast on the AI PC side.
Montea, what's been quite interesting is the unconventional strategy that Louboutin has actually adopted when it comes to deals, right? I mean, we talk about how the U.S. is taking a 10% stake, there's backing from NVIDIA. I'm just wondering, how do we look at this? In the short term, it's great. In the longer term, might that impinge on its flexibility in how it implements its measures and policy and strategy, in fact?
I mean, look, they got CHIPS Act money with the prior administration. That didn't serve them very well, even though they did spend a lot on the foundry side. With the government actually taking a stake and, government being so vocal about onshore manufacturing, it feels like all the investments that went into foundry business may finally start to pay off if they end up landing a big customer. And the hyperscalers are spending, $100 billion in CapEx every year for these chips, and they're going to TSMC. So ultimately, if Intel ends up landing a big customer, then the partnership with NVIDIA may look like a great step. $5 billion investment from NVIDIA and interfacing with NVIDIA, I think may be a very sound strategy.
Okay, Mandip, hang tight. We're going to try again. Let's get to Amar Babu, Asia-Pacific president of Lenovo, the world's largest PC maker. Amar, good to have you with us. We've been talking about Intel and that recovery story. I'm just wondering, is this a reflection of the PC chip market? I mean, how are you reading the numbers from Intel?
Thanks for having me on the show, Haslinda. No, actually, the market has been quite strong. We declared our Q1 results. That's the latest that I have for April, May, June, and it was very strong. Worldwide, we grew at 22%. Our PC business particularly grew at over 20%. Our infrastructure grew with a lot of AI-related investment. So overall, the market has been quite strong. And particularly in Asia-Pacific, we even grew faster at 29%, accounting for almost 19% of the total revenue. So yes, very strong demand, definitely in the market.
Well, it's been a strong recovery. The question is whether that's sustainable. What are your own assumptions for 2026? Is that expected to pick up yet again?
So, when we look at, obviously, we have a few key drivers. One of the key drivers was and continues to be AI. We see this, and I think we are just at the entry of a long decade of AI transformation. And we believe that customers will continue to invest as they build AI into their businesses, into their processes, into individuals. So our vision of hybrid AI, personal AI, enterprise AI, public AI, and we see investments happening across the board. Significant investment is expected. We also had the transition from Windows 10 to Windows 11, as Microsoft announced their end of support for Windows 10. And that also drove a lot of refresh. So, and we need to keep in mind that there was a huge adoption of PCs and other devices during the COVID era, about 5 years ago, right? So we are coming to the point where these PCs and devices are up for refresh. We have the AI innovations coming up. So I think together, we believe that we will continue to see sustained growth.
So, Amar, this is Mandeep. If I can pick your, comments on what's driving your PC demand. Are you selling more x86 PCs or ARM-based PCs, or AMD is the channel where you're finding more success? Just help us kind of understand the pockets of the strength that is coming from AI for you.
So we are doing it across the board. I mean, obviously, we have partnerships. We are an ecosystem player, very strong partnerships with all the vendors that you mentioned. And we are actually seeing growth across the board. Our AI PC business, our AI PC mix actually is almost about 30% now. And we see that continuing to grow. Customers are looking for that power. They see that once you're able to get the right applications, you will find the productivity improvements that will pay for itself. So I think the need for refresh coupled with the AI is definitely driving the demand that we are seeing in the market.
Is this demand stronger than the demand that you saw around the COVID refreshes, or where would you stack it against, some of the highest demand that you have seen for refresh cycle in the past?
Well, I think, if COVID obviously was a unique kind of a situation, so there was a lot of different kind of demand. It was not really refreshed. It was because people were using technology to do their daily course. So looking at the refresh of that, I think it is one of the sequences that we are seeing every time in terms of the 5-year cycle. And we are seeing the refresh come up. So I would say it is strong enough, similar. I don't have exact comparisons, but I think it is quite strong. And it's reflected in our numbers, right? As we are growing 22% year on year, that's a pretty significant growth on our base. In Asia Pacific alone at 39%. Our revenues for Q1 was $3.7 billion. So it is a pretty strong growth that we are seeing.
Amar, geopolitics still top of mind, U.S.-China tensions, and of course, the curbs on chips. I'm just wondering, how much impact has that been on Lenovo?
I think, we operate in 180 markets. We've been a global company for 20 years. Tariffs, geopolitics, it's actually part of the environment. And I think it is something that it's not unique to Lenovo. It's a factor of business for all organizations. And we believe that it's key how you adapt to the environment and remain flexible during these uncertainties. And that's something that we've built up. The two models that we are very proud of is we have our global-local model, where we leverage our global scale, global technology, global R&D, global supply chain, manufacturing, but combine it with very local execution in each of the markets that we have. And the global supply chain, specifically our ODM plus model, is a good mix of Lenovo's own manufacturing plus our ODM partners across, we have our own sites across 30 locations. That allows us to actually have a unique end-to-end, agile, flexible, and resilient model. So we've been able to work within that to adapt quickly, depending on some of these moving parts in the environment.
You also have manufacturing site in the U.S. and just wondering if you're planning to do more on the back of what we're seeing right now, the tensions between the two countries.
So we look at manufacturing as truly a global supply chain. As you mentioned, we have manufacturing in U.S. We have manufacturing in 30 plus sites across the world. We're actually investing in Saudi Arabia. One of our partners, Alat, invested $2 billion with us, and we are building a state-of-the-art plant in Saudi Arabia. We have manufacturing in Asia Pacific and China. So we look at this as a global supply chain and try and build the flexibility so that we can adapt depending on the situation as to where we would meet our customers' demands the best from. And so that continues to be an ongoing process of looking at it and making sure that we are able to adapt quickly within each of the different manufacturing sites.
So would you assess, where the demand is in terms of AI PCs? Because Intel CEO last night called out 290 million PCs for 2025 and growing in 2026. Would you think that's the right ballpark, or are you higher or below that number in terms of your own view?
So we definitely believe that AI PCs will continue to become a bigger part of the business. As I mentioned, we are already at 30%. We expect that in 2 years' time, almost 70% of all PCs will be AI PCs. And our own innovation roadmap, our own product roadmap also reflects those investments that we are making in R&D accordingly. So we are definitely seeing AI. There are, I would say, 3 parts to the investments for AI. First is the infrastructure. The data centers started off with the public AI. Now we're seeing enterprise customers build up inferencing-based infrastructure. And then you have the front-end devices, which is PCs, as you mentioned, and then personal use, right? You and I as consumers. And we are seeing that build up. Obviously, what underlines all of that is the solutions and the services that tie up. And this is where we at Lenovo believe that there's an opportunity, because we have this unique ability as a full-stack service provider to cut across hardware, services, solutions, data, and be able to provide those solutions to our customers. So we see the opportunity across all of these. And I believe that you will see the growth coming up through these AI-related investments from all these different vectors.
I mean, one of the cynical views that I've heard is these AI PCs still can't run the LLMs on device. You still have to go through, the server, and that is what has slowed things down, or I guess that's where the bear argument comes from. So do you think these AI PCs would be good enough to run these large language models on device?
Absolutely. We have very powerful devices that can definitely have local applications. One of the key things which is why our hybrid AI model comes in. When we talk about personal AI, our vision is to make the device and the solution built up as an AI twin potentially, right? A twin that understands with you, makes your productivity significantly higher, but the data and the privacy remains within the PC itself. And for which, of course, you need to have models that can run and the power of the PC that can support it. With 40 TOPS plug kind of operation, I believe we have the power. What we need is, of course, the solutions and the right applications to be able to leverage that power. And we are seeing very strong use cases come up where we're already seeing some of these coming. And I think that as you see more innovation coming up, you will see customers moving into AI PCs and definitely being able to leverage the technology and the power.
Amar, we also know that you've been trying to grow your non-PC business. Where are you with that?
Actually growing very well. Today, 47% of Lenovo's global revenues comes from non-PC business. And that basically across our infrastructure business, our services business, and our smartphone business, we're growing extremely well, particularly here in Asia Pacific as well. We've been growing very strongly in all these areas. So these were our faster growing businesses. And we are seeing that reflect, as I mentioned, our overall business is growing at 22, and these businesses are growing even faster, which is exactly our strategy, that these would be our growth drivers. And we're seeing that happen in our results.
Amar, just one final question. It's a macro question. I mean, these are uncertain times. Trade deals are trying to be signed by leaders. Inflation is an issue. There's so much uncertainty out there. For you, as you grow your business, what's the biggest risk out there?
I think one of the strengths that we have is our, as I mentioned, our global, local, and our global supply chain. So I think we need to be very adaptive, and that's clearly something that we have built into the way we work. And we believe that AI can be a very good tool to help us navigate some of these uncertainties as we start looking at how to balance, where to balance. So I believe that bringing in this technology, bringing in the culture, bringing in our operational model that we have built up over a period of time gives us the ability to adapt. I think adaptability, building a resilient model is the key. And our research shows that we are making progress and we have done well, and we'll continue to work with that strategy. And we are very confident that this is something that it actually becomes a strength of Lenovo in this kind of an environment to work with what we have built.
Amar, thank you so much for joining us today. Amar Babu, Asia Pacific President of Lenovo, and of course our very own BI Global Head of Technology Research, Mandip Singh. Thanks so much for that. India's been trading for about 2 minutes now. Let's do a check on the early numbers out of that market. Of course, front and center would be the Indian rupee. We know that the RBI has been intervening to prop up the currency. The Sensex down about 0.1%. We're seeing the Indian rupee trading at 87.81. As we speak, pretty flat versus the USD. Now, staying with India, its Commerce Minister, Piyush Goyal, says trade talks with the US are progressing and both sides are hoping for a fair and equitable agreement in the near future. The Mint newspaper reported earlier that a deal could lower US tariffs on Indian imports from 50% to 15 or 16%. Let's get perspective from Srividhya Ragavan, Professor of Law and Director of India Programs at Texas A&M University. Professor, good to have you with us. How optimistic are you about this trade deal, that tariffs could fall to 15%?
It's been announced that the bilateral agreement will be announced in the ASEAN summit, which is in October 23rd to 28th. So I believe that there will be some bilateral, at least that's the expectation, that there will be some bilateral agreement that will come through around that time. And thank you, by the way, for calling me in this. I'm happy to express my views here.
Professor, we heard from the Commerce Minister Goyal saying that they're looking for a fairer deal. How does a fairer deal look like?
Well, that's a tough question. It's on the one hand, I think India has been front loading with all the tariffs that's been announced recently. So in some ways, India is ready to negotiate and cozy up to the United States. To that extent, having a deal will, in some ways balance the geopolitical relationship. The fair deal here is the 15%, but the return of not buying Russian oil is bound to hurt India at least a little bit. And of course, then there is the corn and the soya agreement. India has agreed to buy U.S. corn and soybeans, and so that's I believe that's bound to hurt Indian farmers a little bit. So much of it will depend on how Indian exporters are able to, so the big question is whether the 15% that's now being the reduced tariffs will actually offset some of the losses that India will incur because it cannot get Russian oil, which is projected at about $15 billion, close to $13 to $15 billion annually.
It's all about the negotiation, right, Professor? We have a lot of global leaders heading to Kuala Lumpur, where President Trump will be visiting as well. I'm just wondering, is Prime Minister Modi shooting himself in the foot, perhaps, by not attending that meeting?
Well, that's a loaded question. I think if the bilateral deal, especially the corn and soybean procurement by India goes through, that's going to put some pressure on China, because the reason that the United States is so interested in India buying corn and soybean is because it'll open up the markets on the one hand, and it will offset China not actually procuring corn and soybean. China used to be the biggest, one of the biggest consumers of U.S. corn and soybean. So to that extent, I believe it'll put pressure on China to some extent. But I also believe that much of this is going to be negotiations with other ASEAN countries. So yes, it would have been nicer had Prime Minister Modi been there, but I think talks are already underway with Ambassador Gore, and so he's not taken charge yet, but once he takes charge, so to some extent that balances it out.
Right. And one of the issues hindering that U.S.-India trade deal has to do with India's purchases of Russian oil. Now that the U.S. has imposed sanctions on Russian producers, Rosneft, Lukoil, I'm just wondering, that would immediately stop the flow of Russian oil to India, and that would naturally ease tensions between the two sides. Is that a fair way of looking at it?
Well, it could ease some tensions, but India actually moving back would add to the tensions. And, it's not necessary. For example, about 35% of oil in India today is from Russia, and Russia supplies India at a discounted price. So to the extent that India moves back from that, it will put a lot more pressure on Russia. Granted, there is already some pressure, but let's just say it's not working to the extent that the United States wants it to work. So, to the extent that India falls in line, it really would put pressure on at least that's the expectation from the United States, that it'll add to the pressure and choke Russia, at least its coffers, and will in turn affect the Ukraine war. But that's also going to affect India. India now has to find other sources for oil, so it has to go to Middle East for oil, and that'll also put pressure on Indian oil, both public as well as private companies, right, like Reliance, etc., private companies, Hindustan Oil, etc., right? So they have to look for other sources. To some extent, India was able to, it didn't do a rupee-ruble business, but it still was able to work around the dollar, especially with Rosent. And now that could be a problem because the dollar will become again the currency that gets pegged in. So to that extent, India stands to lose a little bit. So much of it depends on the negotiations, as you said, where India has to be able to offset the losses from here, from other areas such as textiles and pharma. Well, pharma will not be affected that much, but textiles and chemicals and other areas that will benefit, steel, aluminum, that will benefit from the 15% tariffs.
Professor, thank you so much for your time today. Srividhya Ragavan, Professor of Law and Director of India Programs at Texas A&M University. Now, before we go, here's a preview of our shows next week. On Monday, we're live at the Bloomberg Business Summit in Kuala Lumpur. Don't miss our exclusive with the Group CEO of Malaysian lender CIMB. We'll also speak with the Managing Director of the Sovereign Wealth Fund, Khazanah. Plus, more insightful conversations ahead from Singapore International Energy Week and the Barclays Asia Forum. That is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.